Happy FriYAY, right? Uh, honestly, this is going to be a quick take and a quick update. Nothing much has happened today. Um, I mean, people have been talking about options and they've been looking at all sorts of charts. But honestly, not much has happened. Sure, Lyft gained a good amount, but let's be honest, Lyft is very much in second place to Uber's lead. And I don't think that they're going to be too successful going forward simply because Uber in my area is always cheaper. I'm currently residing in one of the largest cities in the US. So if it's more expensive compared to Uber here, meaning that it doesn't have a competitive advantage, I don't really see how it could, compete in other cities, other metro areas, etc., etc. Now, D Wave Quantum has been going up and up, which is great to see. Um, the first quantum um, based company that I've ever been aware of was Rigetti in, I want to say, 2018. Um, I never invested, uh, but I was thinking of actually working at the Berkeley, California based company. Um, I guess people don't really talk about it too much. But yeah, it does seem like a solid company. I'm not an investor. I would not know really much about it. But then let's come here. After hours, we saw some positives, and then throughout the day, it kind of just, eh, decreased a little bit. So started the day at roughly like, positive 0.16%, ended at a negative 0.14%. So that's like what, zero point 0.3 drop for the day, which really is not that much. Let's see if we get anything else really, but honestly, again, it's just been a, um, I don't know, boring day, an uneventful day. Uh, I guess I would prefer that to too much of a down is is what a sane person would say. However, I actually love when there are significant down days, great buying opportunities. I never sell, I only buy. I mean, I'm also too young to be selling out of the market in the first place, and I'm not trying to pick stocks. But yeah, I mean, you can see the S&P 500 was down a bit, up a bit, again, like roughly cancels each other out. Um, Strangely enough, the Dow Jones was actually down the most. Again, not really down that much, but still the most. And actually, the Nasdaq was up the most out of the indices, which yeah, I wouldn't expect to. Oh well, I guess it's a little down now. But yeah, I wouldn't really expect days on which the Dow is down to see the other indices go up. But we're all learning here. So far so good. I bought my daily stonks, specifically ETFs, and currently at yeah, 1567 in dividends, at least forecasted, anticipated. But then, right, so I guess we can even view my transactions, which is beautiful. But then you should also know that, so my dividend yield is, very low, less than a percent, 0.622, right? But then my yield on cost is the devil's number, and that is it's higher than my dividend yield simply because I picked up a lot of shares of specifically SCHD and a bit of DGRO when these indices, when these ETFs were quite down, right? Um, so yeah, I I'm hoping to increase the difference between the yield on cost and the dividend yield. Now, why did I say it in such a weird way? Well, to be fair, I don't necessarily anticipate increasing my investments in dividend yielding companies or ETFs too much. I'm still very much focused on growth. My portfolio might say otherwise, especially when you see Main Street Capital and Realty Income right here side by side, right? But you also see the Invesco QQQ. The thing is, um, I'm investing into the extremes in the market. So I have what, 3,000 something dollars worth of VU, so the S&P 500. But then I have almost $7,000 worth of SEHG, which is heavy on growth, aggressive growth, mind you. Plus, I guess QQQ, if you want to add that, 2,000 and 7,000. So I have 9,000 in growth that way. I got, uh, I wouldn't say I got too lucky on NVIDIA. It was an educated guess. I did well in it. But then specifically when it comes to SCHG, for example, I have 23,000. Now adding up all of the growth based investments I made, it seems like I have roughly the same amount, and that kind of is the idea. So, I wouldn't mind the yield on cost going up to 1% or 2% or more. But the focus is not necessarily this. However, the focus is on increasing the difference between these guys, right? So basically, having the dividend payout ratio, or I guess a dividend growth, be quite high. Because at the end of the day, if I want to retire, then I will care about the dividend pay rather than, let's say, growth. But anyways, that's more for really just another discussion. So, yeah, again, uneventful Friday. So, yeah, I hope y'all enjoy your weekend. All right.